Hey guys, welcome to BLONITY Academy. Today we do a little mind game. I will show you some indicators I track to predict the top for Bitcoin and the miners. Yeah, we all are buying and accumulating Bitcoin stocks and all this stuff. Yeah, but at some point the price of Bitcoin will peak again, and then we have to decide, or before that we have to decide, do we sell a little bit or a lot, or do we sell everything and exchange it into fiat, or what are we doing? So everyone is making his strategies, is preparing for that. And today I want to show you a few indicators I track to predict the top for Bitcoin. And in my opinion, the miners will peak at the same uh, time. And so it's going to be very interesting. So, first, my little disclaimer: it's no financial advice. It's my own opinion and estimates. My estimates could be completely wrong. Don't trust, always verify. Understand the numbers. Be aware of scammers, and you know the best where and how to invest your money. Okay, so let's go. First of all, I want to start with the Bitcoin price range. There are a few models out there. There's the lengthening cycle, but also there is the Bitcoin stock to flow model from Plan B, from the analyst Plan B. And he made a new model, the stock to flow cross asset model, which I like more because the price is higher there. Okay, but first of all, I want to show you the stock to flow cross asset model here and what's behind it. So, yeah, the good thing with stock to flow cross asset model is that it compares Bitcoin to gold and silver and other commodities. And the idea is, what is stock to flow? If you have the total amount, for example, for gold, which is above the ground, which is mined the last 200 years or so, or yeah, which is above the ground, so it's 190,000 tons. And every year we have an inflation in gold of, I think right now it's 3,500 tons. So if you divide this, you get somewhere like 50 to 60. The stock to flow is 50 to 60. So that we have this chart here. So gold is here, okay. This is the next target for Bitcoin. So if you go there, you have the stock to flow of 58 right now here. It's a logarithmic scale here, so yeah, you should be aware of that. So it's 1, 10, 100. So here's 58. Okay, this is gold. And here we have the market value. This is the whole market cap. And yeah, gold is right now at 10 billion or so, or at the time of the chart it was made. It was at 10 trillion, sorry, not 10 billion, 10 trillion US dollars. And yeah, in we have here this line from, and there's silver. It's 1 trillion or less than 1 trillion, a lot less than 1 trillion. It's 560 billion here because the stock to flow is the half of gold. So it's 33. So stock to flow half, it doubles from 30 to 60, and you can see here the value goes more than 10x. Yeah, that's the same with Bitcoin. We have the halving every 4 years, and the value goes 10x. We see it here. This the I think the monthly data here, the blue spots, and yeah, this is the average or so. So the first phase in 2010 to 2012 or so, the market cap was at 1,000 USD, so it was nothing. It was proof of concept. Then we were at 100 million. It was before the first halving, I think. It was used as first payments to buy pizza for 10,000 bitcoins or so. Then the next one is the e-gold cluster, stock to flow of 10, was after the first halving. And then we have the financial asset here. It's 100 billion US dollars. So yeah, that's where we are right now, I guess. So we can see, okay, where are the next targets? So this is gold is the next target, because here Bitcoin stock to flow was like 25 or so. And yeah, after this halving, we have a stock to flow like 50 or so. If we count the lost Bitcoins, we are at 60 or more. So yeah, the target here is here, and it's going to be very interesting. So I will encourage you to read all these Plan B essays and his tweets. Follow him on Twitter. It's very, very interesting. I will show you the live models now. So this is the Bitcoin stock to flow model. This is not compared to gold and silver, it's only Bitcoin. And it says, okay, the average price in this cycle is 100,000. And we see the line follows the price here. This is the price here. Okay. Sorry, I have to explain. And the model is the violet, lila, I don't know, line here, this one. And the adjusted model is this one. So we see it for the price follows perfectly. And in the last bull market, the price was above the model for a few months, and at that time also. So we can expect this again, so that the price tops out above 100,000. So that's a very nice model. The other one is the stock to flow cross asset. In my opinion, it's a little bit better than the first one, and the price is higher. It's like I think it's 288,000. Here it's a little bit lower. Is the target here. So we will see whether we can keep up here or we can go above this price, or yeah. But I think, in my opinion, it's a good range between 100 and 100k and 300k or so to expect the next price. Top, but yeah, right now in the world there's unprecedented amounts of money printing, and in my opinion, we could also see something like a super cycle or so, because the last two halvings, the economy in the world, I mean, it was not stable, but it looked like there was no big crisis, there was no money printing at that scale, and so on. The macroeconomic economy indicators and factors were a lot different than now. So I think there is a possibility that we go a lot higher, maybe also a lot lower if all governments say we ban Bitcoin or something like this. But I don't really expect that. So we should always, yeah, keep an eye on it. That that this cycle could also be different. But yeah, first of all, I think 100 to 300k is a good target. First of all, and also this model helps us with the timing. We have these 4-year cycles, and the last two times after the halving, it peaked in December the year after the halving. Okay, here in December 2013, and here December 2017. So some people think it's going to be a lengthening cycle, that it tops out a lot later, and then it's going to be longer and longer. In my opinion, it's possible, but I think this model is, I like it more, because the lengthening cycle means that at some point the one cycle goes above or is more than 6 or 8 years. So it will have two halvings in one cycle. So in my opinion, that makes no sense. We will have these 4-year cycles, in my opinion. Or yeah, I follow this plan B theory, but it's just a model, so it yeah, don't count it as true. Okay, good. So that's about the timing here. I think it's a good possibility that we will peak again in December 2021, so 4 years after the last peak. So this would be somewhere here or so, and yeah, that would make a lot of sense. So let's go to the indicators I follow. I really like this bitinfocharts.com website. There's a lot of good data, and you can analyze a lot here. So the first indicator I track is the mining profitability. Yeah, in 2013, well, let's go to, yeah, the problem a little bit here is we see a dropping mining profitability because of huge efficiency gains in the beginning of Bitcoin. First they mined with their computer, then they had GPUs, and then the ASICs. So we go log scale here. So we see it's dropping a lot, but it's now dropping not as steep as it was back then. So this is very difficult. So we go to the last cycle, or cycle top, in 2017. So in December 2017, the price peaked, but also the mining profitability for the miners, and it was at $3.8 per terahash. So we are now, we are now below, or we are now at 15 cents or so. We cannot see it here. I will show you. I will show you a little bit where we are now. So we are now here. A few days are missing here. So we are now at 15 cents or so. And the last tab was here. So that's a huge difference. Okay. So before that last top in the bear market, I have to show you this. Sorry for that. Doesn't work so well right now. Okay, do it again. Yeah, this sometimes is a little bit annoying. Okay, now. So after the halving, the lows of the mining profitability in 2017 were at 50 cents per terahash. So here we have like 8x from the lows to the highs here. If we do this right now from the lows to the highs, so it's here, it's at it's at 2020, it was at 7 cents. We cannot see it here. If we go 8x, it's more like 50 to 60 US dollars cents per terahash. So it would only be 4x from now, because we're at 15 cents now. And for me, it looks a little bit too small. It's too low. And I was asking myself, okay, how can I predict this? And I think the hardware plays a big role here. The hardware efficiency gains in the last bull market in 2017. The Bitmain S9 was the top miner, and this miner had an efficiency of 98 joule per terahash, or 0.098 joule per gigahash. And right now, all the miners are sold out. Okay. But we have the data from the S19 Pro, one of the most efficient miners right now, with the Watts miner M30S++. The miner has now 29.5 joule per terahash, so it's a little bit more than 3x better than 4 years ago, the S9. So in my opinion, it could be like this, that the mining profitability drops a little bit more than 3x. So it would be from 3.8 US dollar per terahash to 1.26 US dollar per terahash. So it would be somewhere here or so. I think that's realistic. Yeah, not accounting all the fees rising and all the stuff. But yeah, maybe that's a good number. It's not scientifically proved or something like this. It's just a mind game right now. Okay, mining profitability, in my opinion, could drop 3x. This would be a rise from 8 to 9x from where we are now, from 15 cents to 1.26 US dollars. Okay, let's go to the next one. Cent in US dollars. So the money which is sent in the Bitcoin network, we can see in peak of 2013, we were at 3 billion US dollars a day. In 2017, in the peak, we were at 50 billion US dollars per day. So that's 17x from, the difference is 17x. So if you say, okay, we have 17x again, cent in USD, this would be 850 billion US dollars in the end of 2021, and the next peak. So this is going to be interesting, I think. Okay, next one is the average transaction fee. This one is really interesting, and this is like, yeah, the big black box here, in my opinion. This could be huge for the miners, at least in a short period of time. So in at the end of 2013, we had a top of 0.6 US dollars per transaction, and in the next bull market, and the top end of 2017, we had 55 US dollars. So that's 85x from here to here. So yeah, and I want to show you the block size right now. End of 2017, the blocks were already full here. So it's only 1 megabyte or so. These are 2,700 transactions, or maybe 3,000 transactions per block. That's the maximum capacity, and it will not change, never. I hope so. And yeah, that means we were the block were full, and at this point only the market decides how much he's willing to pay for transaction fees, because there are always people, they say, okay, when Bitcoin is at 200 or 300,000, I want to sell, whether it's 1,000 or $5,000 in fees. So this is really a big black box. But yeah, let's do the mind game and say, okay, it rises 85x again from this top. We would be at 4,600 US dollars per transaction for Bitcoin. And right now we are at 4. So this would be, yeah, 100x from here. I don't tell you this happens. It's only a mind game. Okay, let's go to the next one. So there are the G trends, the Google trends. End of 2013, we had a max. Let's go here. 2011, there was also a top here. It was at 10. Yeah, it started somewhere around 1. I don't know what 1 means. Maybe 100 or 1,000 searches or 1 million searches. I don't know. On Google, it's like a factor here. So we were at 10. Or in end of 2013, we were at, it doesn't work right now, but it's at 60, and end of 2017 it's 600, so it's 9x. So it would mean we can go to 5,000 in the next bull run if we go 10x here again. In my opinion, this makes sense. 10 times more people in there, 10 times more FOMO. This is the 10x. It makes a lot of sense. So we are right now at 84. So there's a long way to go to 5,000. Yeah, gotta be very interesting. So then another nice indicator is the fee and reward indicator. So this is from the block reward. There we have the fixed block reward right now of 6.25 BTC per block, which is mined every 10 minutes approximately. And then we have the fees. In the last, or in 2013, in this range, the fee and reward was at 4% in the peak here. 4% of the whole reward, it was fees. So the fees were very low compared to the fixed block reward. Now, or end of 2017, it was at, it peaked at 43.5%. So the top was, yeah, close to the half of the fixed mining reward. So the fixed mining reward was back then 12.5 BTCs. So it was like 5.5 to 6 BTCs in fees. Okay. So we saw that the blocks are full in 2017. So next bull run, the blocks will be very full, and the mempool is gonna be overloaded. So yeah, from here we have from 4 to 40%, and yeah, maybe we can expect here 400%, 10x again, or 9x or something like this, 45 to 400%. So that would mean that the fixed block reward of 6.25% and 400% is 24 or 25 BTCs. So we would have an overall block reward of 30 BTC per block in a very short period of time. But yeah, let's expect the price of 200,000 USD. Yeah, still it's a mind game. So it would be 6 million, 6 million US dollars per block. So 200,000 multiplied with 30 BTC, 6 millions per block. Yeah, and if you're a miner with 1% of the total hash rate, yeah, then you mine a lot of bitcoins and some blocks in a day, and this is gonna be huge. Yeah, I will calculate it. So okay, let's do it. I have no calculator here, but yeah, try to do it with the head. 6 blocks per hour, 24 hours. It's 144 blocks a day, I think. So if you have 1%, you mine 1.4 blocks a day. I hope I'm correct, but yeah, if not, it's no problem. 1.4% of yeah, so you would mine 1.4 blocks a day. If it's one block is 6 million USD, yeah, you will mine close to 10 million a day. So yeah, that would be huge. But we don't know. It's just a mind game right now. But very interesting, I think. So the fee and reward and the transaction fees are the most interesting indicators for me for predicting the price top and yeah, to make huge gains for miners at that time. It's going to be very interesting. So then there are some technical indicators. I'm not a TA guy, but yeah, I want to show you maybe one or so. This is the RSI. People talk a lot about this on YouTube, and I think it's very interesting because in the last two tops, there were in the monthly RSI there were some double tops there, and I think it will look it could look the same again in the next top. Yeah, let's add the RSI. So in 2013, we had this double top here on the monthly RSI. And in 2017, we had also a double top. So now we go again here and yeah, maybe there's a double top again. On the daily, you can see a lot of divergences and all this stuff. So it's going to be very interesting to follow this. I think it's the combination of a lot of indicators. But the strategy is also very important, I guess. You shouldn't sell all your coins or your miner stocks or so at one point. Make tranches, start at some point and make a strategy and yeah, keep the strategy. And because people will say, oh, it's going to 10 million or so, because the people, when they go crazy and there's FOMO. Yeah, I saw that 3 years ago with all the altcoins and then they dropped to zero. So at some point you should sell a little bit, at least. Yeah, that's very important, I think. So make a strategy, check the indicators. We will talk about that again. And for me, it's very interesting. And I want to ask you, what are your indicators to track to predict the top? And yeah, tell me in the comment section about that. It's going to be very interesting for me and for all of us to share these informations. I think there are a lot of very, very intelligent and smart people in this audience here. I saw it in the comments. And thank you for that. Thank you for the nice feedback. And yeah, I think that's it. See you in the next one. Auf Wiedersehen.